Manipulating markets is illegal. Many financial leaders and celebrities have gotten in trouble for publicly talking about their purchases and positions openly. Even Elon Musk was fined over $20 million by the SEC for talking about potentially taking Tesla private. But for the Federal Reserve, it's their job. Their mandates, such as full employment, stable economy, and now, of course, racial, gender, and income inequality, of course, even adding climate change, can only be accomplished by manipulating markets. Now, this consists of only two levers that they have, which are interest rates and the monetary supply. And they're using these liberally, to put it gently. Now, in this video, I'm going to discuss how these two levers are being pulled and the trend that is being triggered by this single indicator right now. I'm going to break it down, how we want to be positioned as this all plays out. So let's go. Okay, now real quick before we dig in, if you're new to the channel, my name is Mark Moss and I make these videos because I want to change the way you think about money, because almost everything that you've learned is wrong. Now, I know it's hard to navigate these markets correctly. It's scary to think about what happens if you get this wrong. And I know it's frustrating when you don't understand. So I try to take these complex subjects that affect your money, your family, and your future and make them as easy to understand and actionable as possible so you can be educated and knowledgeable about what's happening and coming in the future. So if you like these topics and want to help me get them out to more people, to wake up more sleeping lions, do me a small favor. Take 1 second to click on that like button so the algorithm sends it out to more people. Hit that subscribe button if you're not already subscribed, the bell notification so you know when I put new videos out. All right, now let's go here. All right, so today we are talking about the triggers, the Fed triggers, what they're triggering in the markets. Now, the first thing we start with, like I said, there are two tools that they have, and really with the triggers. Before we get to the trigger, of course, the one that they have is interest rates and money printing, of course. And so what do they always do? They want to turn on the printer. I'm sure you guys have seen this meme before. I don't have the GIF playing, but I'm sure you get the money cannon and the comedy of Powell doing that. And really, it all starts with what's happened over the last year, which is this stimulus. Lots and lots and lots of stimulus money they've been pumping out as fast and furious as they possibly can. As a matter of fact, in the last 12 months, it's about $8 trillion. $8 trillion, it's amazing. And it's just so hard to even put that number into perspective because we talk about these big numbers all the time. But to put it into perspective, and I've used this reference plenty of times before, in the 2008 great financial crash, the great financial crash that took out the entire world's global financial system. It took $700 billion to save it, to save the world, $700 billion. Now we've spent $8 trillion in 12 months. It breaks down about $3 trillion with the Fed, about $3.1 trillion under the Trump government. The Biden administration's already done 1.9, so that brings us to $8 trillion. But that's only part of the story. We have proposals for another 1.8 trillion, which is the American families. We have another proposal for 2.3 trillion for the American jobs, which would bring us to a grand total of $12 trillion, which is just an insane amount of money. You can see Joe Biden wants to be spending $6 trillion, which is insane. And I've shown you these charts before, but I'd love to show it to you just so you can visualize it, because it's insane when you see it. When you look at, remember in 2008, they saved the world with this little blip right here. Can you see that? With that little blip right there. And now look at where we are at. So when you visualize, you can see it. And what is even crazier is that it's not going to stop. So the US government spent $600 billion more just in March, $600 billion more in March than it collected in revenue, which is the third largest monthly deficit on record. Of course, but that doesn't even tell us the full story, because as you can see, the CBO, which is the Congressional Budget Office, they project a deficit of 2.3 trillion in 2021. Nearly 900 billion less than the shortfall recorded. All right, but we're gonna exceed that big time. All right, now I'm not going to dive into exactly why, but just know that that number is probably going to be peanuts by the time we get to the end of it. Now, the thing that a lot of people want to know is like inflation. The Fed says we don't have inflation, they can't get the inflation target, or maybe we're just getting over the inflation target, but not for long enough. Inflation is transitory. The thing is that inflation is nuanced. All right, so what does that mean? Well, it's different things to different people. It depends on what you're looking at. All right, it finds its way into different types of assets. All right, now we can see households' inflation expectations. This is 10% right here. This is where they're expecting. So the Fed says, well, we're trying to get 2%, but the households are seeing 10%. But it really depends on what you're spending money on. It depends on what you're looking at. Let's look at a couple of these headlines I have up. Well, before we dig into these headlines, well, we can see here, consumer prices rise more than 9% at the gasoline pump. Have you guys noticed that? You go to fill up your gas, 9% up, of course. We've seen this one. U.S. consumer prices post their biggest gains in 8 years. Prices are up, the biggest they've been up. This one you've probably heard about. I haven't really covered it much on this channel, but Pure Panic lumber is up 280%. 200%. So if you're trying to buy a home, guess what's going to happen? That's something that I've been looking at doing, and unfortunately that is kind of off the table for me for right now. We're going to see what happens with lumber prices. Used car prices. Used car prices are the biggest monthly increase in 68 years. It's amazing. What else we got? And not just used cars, we got new car prices are skyrocketing this spring. We have, of course, why? Well, the critics slam the Fed as home prices rise at historic rates. I could go on, but I think you're getting the point here. The last one that we'll look at is just, of course, U.S. stock indexes. Of course, all the stock indexes are at all-time highs, etc. All right. So inflation is a nuanced thing, but it's definitely taking off. Now, the oldest inflation hedge in the world has been gold. That's been the oldest inflation hedge in the world, because as they're inflating the money supply, right? They're increasing it like a balloon, inflating the money supply. Every time they print a new dollar, it makes all the existing dollars worth less. And so you'd want to go into an asset that can't be artificially created. And so for 5,000 years, gold has been that. And so as you might imagine, when they started printing all that money at the pandemic, gold took off like a rocket ship, right? As a matter of fact, right here at the bottom in March 2020, it took off from about $1,450 all the way up to over $2,000, setting a new all-time high. All right. However, then it came down. It fell flat. Like, what the heck happened, right? Like, I mean, if there was ever a time in history gold took off, boom, and then it just worked its way all the way down to right here. All right. And like I said, if there was ever a time in history it should work, it should be now. 35% of all US dollars were created in just the last 12 months. That's what gold's supposed to be doing. So what the heck is going on? So like I said, if not now, then when? If gold's not gonna work now, will it ever? And really the question is, are people giving up? Right? And then maybe more importantly is why? Why isn't it working? And let's take a look at that. So we can see, first off, the real reason that gold prices tumbled this year isn't what you think. It's not because they didn't print trillions and trillions of dollars of money. Of course, we know that. So we can take a look at this, and I want to show you this trigger right here. And so really the answer is that these bond yields. And so I've kind of covered this before, but we're going to break it down a little bit. And we can see that bond yields were falling. All right. And then they started creeping back up. And if you look at it in comparison to the gold chart, you can see, let's compare these two here, that during the exact same time, when gold peaked right here, is the exact same time that this bond chart bottomed out right here. And as this started going back up here, so as this was coming down, gold was going up. This peak coincided with this peak, and as it's been going up here, this has been coming down. But check this out. Right here, notice that it's starting to come back down again. And notice that this peak right here coincides with this peak right here as it's going back up again. Is it really that simple? And per this chart, have we found the bottom, and is gold going back up again? Well, gold forecasts are expecting a bottom line in gold. Of course, look at the date here, which is March 1st, which of course is right here. As you can see, this is March 8th. So this is kind of what is going on. So that is the trigger that we need to be watching. So let's take a look at that. Is this going to continue? What do we expect from those rates? Well, we know that inflation is shooting up, obviously, right? And the Fed's starting to admit that it has a problem. So we can see 12-month inflation is going up. Of course, I showed you that all over the board. We have inflation, and it's not just transitory. It looks like it's here to stay. And the problem that the Fed has is that they're fighting a battle they cannot win, right? I've talked about this. They're stuck between a rock and a hard place. They have to continue pumping money in, but at the same time, they can't let rates keep going up. But they want to keep putting more and more money in. As a matter of fact, on top of the 12 trillion they're already talking about, now they're already talking about another round of stimulus, another batch of payments for 2021. But like I said, they want to keep pumping out the money, but they can't let the rates go up. Yellen says that they're not predicting higher interest rates. Of course they're not. How can they afford higher interest rates on $28 trillion of debt? And so what happens, right? Their option is to resort to what's called yield curve control, where they're going to basically buy up all the treasuries to keep that yield down. All right. And so if we want to know what's going to happen with the yields, they're telling us, right? So gold has been in this accumulation pattern. It's been in this accumulation pattern, like I said, since about mid-March. It's been making its way higher. The thing with gold, the thing with any assets, and you've probably heard how easy investing is, right? It's so easy to get rich in investing. All you got to do is buy low and sell high, right? Simple. Simple. Well, how can you buy low and sell high unless you buy when it's low? Which is right now. Gold's been in its accumulation pattern. It's starting an uptrend. It's not about catching knives, trying to time the bottom. It's waiting for that trend. And as we're seeing, it is doing just that. We can see all over the board, Turkey, countries, Nikki East, Turkey is scrambling for gold, overtaking Russia as a top buyer. So it's not about me going and buying a couple ounces at the store, or maybe some rich guy buying a big bar of gold. We're talking about countries are scrambling right now. That's their words, not mine. Putin's bid to ditch the dollar. Russia is literally de-dollarizing right now and trying to swap everything into gold, and euros getting out of the dollar. We can see over and over and over. This is Russia adds 15.6 tons to gold reserves just in April alone, an extra 500,000 ounces of gold. It's keeping ahead of China in its monthly gold accumulations. It's trying to beat China. You understand the importance of that? Russia and China, trying to get out of the dollar to build a new system, are racing each other to acquire as much gold as possible. Do you see what's happening here? The Bank of Russia almost always announces a gold reserve increases, right? And it passed on to the IMF, so the IMF, International Monetary Fund, told them how much they got. However, it's the world's 5th largest national holder of gold, so they're trying to get up there. There's a new financial system coming. And some of these people think these countries may want to try to back it with gold. It's within spitting distance of the world's number 3 and 4, which is of course Italy and France. One thing I want to point out down here, China has been increasing its gold reserves at a faster pace than it has been reporting to the IMF. Of course, you can't trust anything coming out of China, so they are adding more gold than they're letting on. Nobody really knows exactly how much China has. They say that it's been hiding this excess gold. China is hiding their excess gold. They don't even want us to know. They're saying that it goes into accounts that aren't supposed to be reported and things like that. That's what you call accumulation. Now, there's leverage plays to buy gold, right? So of course, if I buy gold at right now 1,800, it goes up to 2,000, 2,300, I make $300 or $500, right? But you know that I love to talk about Bitcoin, gold mining, because it provides us this leverage play. Now, there's one company here that I've been taking a look at. It's called Newfound Gold. All right, and Newfound Gold, this is the same time frame as gold was going down. Newfound Gold actually went up 400% during that time. All right, now I'm not recommending this company. As a matter of fact, it's too late. The last thing you want to do is be chasing pumps like these, but it's amazing that they've been able to have this sustained performance during that time. And the reason why is because of the accumulation that we're talking about, right? Countries are accumulating gold. People know this. And this company had what we looked at as a very key drilling methodology. The way they went and approached the market was different than a lot of the ways that we've seen other mining companies approach the market. Now, you know that I always like to talk about following the team. And so what I've found is that from that Newfound Gold company, the company that's been outperforming, it's too late. They're already past where we want to get into them, but their key executives have started another company. And their key executives have all that information, and they've taken it to the next company. The key people, there's a few key people that I've identified, and I always like to follow the team because they've already done all the hard work, right? They're not going to take that success they've had and go join a losing thing. As a matter of fact, success breeds more success. So we have their leaders, Paul Matsayek, Colin Kettle, Basim Morabak, and also Craig Roberts, all have come over from Newfound Gold. So it's the same team with the same strategy doing the same thing, but it gets even more intriguing than that. So let me show you what this looks like. Now, there's a lot of risk in any business. Everything in life has risk. As a matter of fact, I tweeted the other day that there's no such thing as safety. Everything is trade-offs of risk. Now, a lot of times with gold mining, there's what's called political risk. And that political risk is because they're drilling in countries that could nationalize them, for example. So it could be Colombia or Chile or whatever. And we could see, or we have seen in the past, where a country would seize the gold mine, for example. And so you always want to make sure that you're aware of what that political risk is. Well, in this case, this company that these guys are with is called Nevada King, and they are in America. They're drilling in the United States, so they have American jurisdiction in the state of Nevada, which is actually the #1 gold region on the planet. All right, so not only do they not have the political risk of being in these other countries, it's in the United States, but it's also in the #1 gold region of the planet, which is called the Battle Mountain District, which is a pretty cool name to have. But it's right in the heart of where all the best gold mines are, right here. And what they've done, and this is the strategy that was so genius, what they did is they went and staked out over 8,000 claims across Nevada. So they basically went and just took all the land, staked all their claims, so they have that. As a matter of fact, they own the 4th largest land package of any active company. So they went out and did all the work. They went and grabbed up all the best, 8,000, 4th largest land package of any place, and it's in America, in the United States, in Nevada. All right, now when you add all that up, it makes what I think turns Nevada King into what I'm calling the perfect target. Now, what do I mean by that, the perfect target? Well, you have to understand the way that this industry works, the gold mining industry. So the way it typically works is, of course, all economics are driven by supply and demand. And so when there's more demand, people want that. But there's always limited supply, which is what makes gold the perfect inflation hedge. Because there's limited supply, you can't just artificially increase that. And so the way it works is you have the major gold producers at the top, and they cannot produce enough gold to meet the demand that's out in the market. And so what they do is they go out and they start looking to acquire junior miners, the ones that have lots of gold, the ones that have been out there staking the claim, like Nevada King has done with the 4th largest land package in the #1 gold district in the world. All right, now in Nevada, it has some of the biggest, the most giant competitors in the space, of course, being the #1 gold district in the world. And so there's lots of people in this space that you might know, have heard of: Newmont, Goldcorp, Vail, Barrick, of course. And so as these giant companies in Nevada are having more demand than the product that they have, they start to go out and look for mergers and acquisitions. They start trying to buy smaller companies, smaller claims, smaller land packages, et cetera, so they can instantly increase the supply to meet the demand that they have. All right, and so that makes Nevada King perfect for a buyout in my position, which is why I say they're the perfect target. Now, let's say that it doesn't happen. So there's no buyout in their future, which of course I think there is. And the buyout is also the fastest way to return value back to the shareholder, because we can see, as a shareholder, we can see the stock price increase substantially in a very short period of time. But if it doesn't happen, no big deal. As I said, the team from Newfound Gold has already had massive success. As a matter of fact, at Newfound Gold, they saw 400% stock price appreciation while gold was trending down. And that's because the team knows what they're doing. The team has the drilling methodologies, the time, and in this particular instance, they also have the stakes and the land package to go with it. And so they can easily just duplicate the same thing that they've done at Newfound Gold and just 400% increase on their stock price, or they could be ripe for the buyout if that happens. Either way, I think that we're looking good with this position. Now, either way, the future is bright for gold, right? I just think that everything is set up. We have massive stimulus that's happening. Of course, massive deficit spending. Remember, always back to supply and demand. So as inflation continues to go up, more demand will be on gold. And so the massive stimulus, the deficit spending, of course, the trillions that they want to spend on infrastructure projects, that's all going to increase inflation. As that increases inflation, it's going to require more demand on gold, but we have massive gold shortages. We don't have enough. If you've tried to buy physical gold, you've seen there's massive premiums set on the price of gold, and that's because there's just not enough. So there's increasing demand, but not increasing supply. And of course, we know what that does to the price, all right? And so everyone's gonna be looking to gold for protection. I already talked about China, Russia, Turkey. They're already competing to acquire more gold in the next country. And so not only are countries competing, I believe institutions and retail will be competing, and we're gonna see just massive demand for gold. And the key here is really for us to be ready. Watch this Fed trigger that I'm talking about. It's driving the price of gold up and down, and we need to be ready for that. We can see that accumulation is happening right now, and we expect the price to go up in the future. Now, what do you think? Leave me a comment and let me know what you think. Ask me questions. I'd love to get engaged with you and answer questions and go back and forth in the comments down below. And of course, as always, give me a thumbs up on this video if you like it, because you know I'm working hard to bring this content to you each and every week. And if you don't like the video, that's fine. Give me a thumbs down. But leave me a comment and at least tell me why, so I can know and we can make better videos, all right? That's what I got for you today. To your success, I'm out.